Hi, I'm Amy Ford, and I'm going to teach you how to prepare the most difficult of the financial statements, the statement of cash flows. The statement of cash flows is made up of 3 sections: operating, investing, and financing. Now, the first thing we will cover is what goes into each of these categories. Then we will go through the preparation of the statement. I have lots of good examples to help us cover this difficult topic. Now, the primary purpose of the statement of cash flows is to provide relevant information about the cash receipts and cash payments of an entity during the period. To achieve this purpose, the statement should provide information about cash inflows and outflows from the operating, investing, and financing activities of an entity. The statement of cash flows explains the change in cash and cash equivalents during the period. It reconciles the period's beginning balance of cash and cash equivalents with the ending balance. First, let's go over operating activities. Cash flows from operating activities are primarily derived from the principal revenue-producing activities of the entity. They generally result from transactions and other events that enter into the determination of net income. Now, one hint I always tell my students is to ask yourself, is this something that the entity does every day? If you can say yes, that means this is probably an operating activity. Transactions that enter into the determination of net income means revenues and expenses, correct? Or in other words, items on the income statement. So that is one very simple way to remember what transactions are operating transactions. Now just remember that operating transactions are related to the income statement. Examples of cash inflows from operating activities would be items such as cash receipts from the sale of goods and services, including collections of accounts receivable, cash receipts from royalties, fees, commissions, and other revenue, and cash received in the form of interest or dividends. Examples of cash outflows from operating activities are cash payments to suppliers for goods and services, cash payments to employees, cash payments for taxes, and payments of interest on debt. Now, interest and dividends are probably the most missed questions for my students when I test them on the statement of cash flows. Remember, both the receipt of interest and the payment of interest are classified as operating activities, and the receipt of dividends is also an operating activity. The second section on the statement of cash flows is investing activities. Cash flows from investing activities represent the extent to which expenditures have been made for resources intended to generate future income and cash flows. These resources are the long-term assets. So that's a quick way to summarize or remember the investing transactions. Transactions that include long-term assets, such as property and equipment, notes receivable, and investments, are investing activities. The following are examples of cash outflows from investing activities. So cash payments to acquire property, plant, and equipment, intangible assets, and other long-lived assets, cash payments to acquire equity and debt instruments of other entities for investing purposes, and cash advances and loans made to other parties. Cash inflows from investing would include cash receipts from the sale of property, plant, and equipment, intangible assets, and other long-lived assets. Cash receipts from the sale and maturity of equity and debt instruments of other entities for investing purposes. Cash receipts from the repayment of advances and loans made to other parties. The last section on the statement of cash flows relates to financing activities. Cash flows from financing activities generally involve the cash effects of transactions and other events that relate to the issuance, settlement, or reacquisition of the entity's debt and equity instruments. To summarize, financing activities are transactions that impact long-term liabilities, such as notes payable and bonds payable, and stockholders' equity. Two examples of cash inflows from financing activities are cash proceeds from issuing shares and other equity instruments, and cash proceeds from issuing loans, notes, and bonds. The following are examples of cash outflows from financing activities: cash repayments of amounts borrowed, payments of cash dividends, cash payments to acquire or redeem the entity's own shares, and cash payments by a lessee for a reduction of the outstanding liability relating to a finance lease. Now make sure you remember the cash payment of a dividend is a financing activity, as that is one my students often miss when I quiz them on the statement of cash flows. Remember, the statement of cash flows is only concerned with transactions and activities that have an impact on cash flows. Information about all investing and financing activities that affect recognized assets or liabilities, but not cash flows, must be disclosed in the notes outside the body of the statement of cash flows. If there are only a few transactions, disclosure may be on the same page as the statement of cash flows. Otherwise, they may be reported separately with a clear reference to the statement of cash flows. Examples of non-cash transactions include converting debt to equity, obtaining assets by assuming directly related liabilities or entering into a finance lease, obtaining a building or investment asset by receiving a gift, and exchanging one non-cash asset or liability for another. Many exam questions concerning the statement of cash flows ask the calculation of the appropriate amount. These questions could ask you to calculate cash flows provided by or used in operating activities, investing activities, or financing activities. You should understand not only the items within the statement of cash flows, but how to locate those items and how to do the related calculations. Is what we've covered so far helping you understand the statement of cash flows? I really hope you've learned something. If you want to learn more about how to prepare the specific sections of the statement, including both the direct and indirect methods for the operating section, then click the link below or go to Gleim.com and look for our free basic accounting course in the CPA free resources section. In the course, you'll find great information on other topics, such as all the details on how to record investments and long-term liabilities, which can really help you in your financial accounting classes. So click below or go to Gleim.com to learn more.